Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you. This morning, we made it to the end of the week, everyone. I feel like we all deserve a round of applause for that. On today's show, we're going to talk about the cruise liners and why they're weak this morning. Really, we're going to talk about the rally that we've seen all week and how sustainable this really is going forward. As far as overnight headlines, Boris Johnson, first major world leader to come down with the coronavirus. That could be weighing on sentiment here this morning. We'll also talk about earnings reactions from LULU and KBH after the close yesterday. We'll take some questions from our chat as well. And our guest today is at 8:45. We'll be joined by Jason Raznick. He's the CEO of Benzinga. We liked having him on the show so much last week. We thought we'd have him on every Friday. So that's the plan for today's show. Joel, what's the word here in the overnight trading session?
Giving back a lot of those gains from yesterday, Spencer, trading down 81 handles at 2526.75. Spirited open off that crazy close yesterday. We'll talk about that with Triple D when he comes on. Pre-market high 2634.50. That's just above the high from yesterday. Folks, we ain't going back there today. Kind of wish we were, but we're not. 24.50. That stands as your low, current low of the session. On the downside, not too far from Thursday's intraday low at 87.25, and yesterday's low way down there at 24.02.25. Sure hope we don't see that in today's session. Crude, quiet but weak, down 26 cents at 22.34. Gold still hanging out here in the 1600 handle. We're looking at the June contract down 18.80 at 1641.20. Silver down 8.6 cents at 14.59. Bitcoin flat here, down $25 at 66.70. Triple D, what were those buying balances like on the close yesterday?
We did the day before. It was definitely the Biden thing that was impacting the markets. It was coincidental when that broke. There was also a lot of sell imbalances too. Yesterday, people are trying to find reasons for the 350 pop. There was huge buy balances. So again, on the close, and they lifted the stocks right into the close. You saw a lot of stocks run. Check out Procter and Gamble. The move on the close in the last 10 minutes, it ran $4. Like there was just huge buy balances. Why these are so much more impactful than normal is because at 350, because normally, I'll just explain the way the imbalances work. Normally there's floor brokers down there on the floor. So in the case, and we're moving around here, hang on. I'm getting fills. I got to trade take price. I'm good.
And that's what I wondered out loud a few weeks ago when they announced that the floors would be closing. It would all be done electronically. I said the only theoretical impact be on the closing auctions, and I guess I should have said closing.
You're correct on the opening auctions and the closing auctions. The reason that they're so impactful at 350 because normally there's floor brokers down there, and you can subscribe to the services, and they got a feel for what's going on. They know these imbalances actually start coming out on the floor as early as 2 o'clock. The public feed comes out at 350, but all the floor traders kind of know where they are, so they've already priced the market in. This is entirely new information for everyone at 350 right now because there's no floor brokers on the floor that have the information ahead of time. So it's new information. That's why these violent swings are happening at 350 when they finally get the closing information because there's no floor brokers there that know this information. So it's all new to everyone. That's at least what I think is happening anyways. So, and that's what makes sense because we've seen some violent moves at 350 the last couple of days. And yesterday was those buy imbalances. Media come out, try to find a fundamental reason to justify it. It was right on the button at 350.00.
Yeah.
And they ripped the market on that. We watched some S&Ps go up 30 handles in the last 10 minutes.
Instantly. No,
instantly.
I mean,
because the algos are on it, Joel. The algos see that. They're like, buy imbalances. Boom, buy stocks. Ding, 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 ding. And it goes up. The algos, it's all 350. That information comes out, hits every HFT program out there, and they're going to rip the market higher on that news because they're just doing arbitrage. So, these stocks are going to close high. I'm going to buy them right now at 350 and sell them at 4 o'clock. If they were doing that on Procter & Gamble, they bought Procter & Gamble 104 and sold it near 108. I mean, it was a huge trade for them. And, you know, it wasn't just Procter & Gamble. You know, just look at the charts. They all ripped like that. There was some that really ripped. I mean, you know, Verizon, look at Verizon's move in the last 10 minutes from 52.5 to almost 54. This is a, you know, a thick stock moving. So the imbalances are very influential right now. The opening imbalances are influential too. We've talked about them on certain days. Right now, I'm looking at them. They come out at 8 o'clock Eastern. Right now, they're just mixed. They're a little bit more to the downside. They're more to the downside, but they're so small, they're not influential at all. But when you see like huge buys across the board, that's going to be moving the market. That moves the S&P, that moves the stocks. They obviously move in tandem together. And that's why you had a big pop yesterday in the close. So you had some huge buy imbalances. It felt like an upside capitulation move. I mean, let's think about it. We've had an incredible rally here. And if you are long stocks and uncomfortably long, and you know you didn't lighten up into that rally, then you know then whatever happens at this point in time, because this market gave everyone who was uncomfortably long a nice out yesterday. We got up even more after hours. We're up to 263 on the
Yeah, I
spot.
did see that. Yep.
You're talking about getting like 40% of the losses back. In some cases, like I said in Nvidia, the stock rallied 60% from the lows. So you're talking getting 60% of its rally of its losses, not 60% from the lows, but 60% of its losses back. So these are big moves. These were good moves to lighten up into, in my opinion. I do not think the worst of the news is over. I do think we're going to retest those lows. That's why I'm not backing up the truck and buying. I did buy a couple stocks. I did buy nibbling half-size positions. I bought some Qualcomm. I bought some Activision Blizzard. So I bought those two stocks. I also bought some Kroger. Kroger was pulling back there, and I was like, you know what? It's been absolutely destroyed. I actually, you know, like those Kroger stores now. I was in one. I talked about this 6 months ago. They're really turning them around. It felt like a Walmart, like even a classy Walmart. I believe in the Kroger turnaround story, and I've wanted the stock for a while. It's given the entire rally back from last week or from 2 weeks ago.
Yeah,
I
it
think you're in the
surely
support
did, huh?
area, so I nibbled into some Kroger too. Those are the three stocks that I did buy. Obviously, we had a significant rally after that all day, so I'm up in all three of those stocks. Well, I was. Now they've given it back. Maybe I'm not gonna be, but I nibbled. So I wasn't like going all in. I just nibbled into some stocks. I had sold my ATVI. I had sold my Qualcomm. I wanted to get those stocks back, so I have those stocks back. I've never owned Kroger. I was like, you know what? I don't own any grocery stores. I like this, and I just thought, you know, maybe. So I nibbled into those three. That's all. Nibbling. Still sitting with almost 80% cash. That's how much I put in. Almost nothing. You know, maybe 1% of my overall wealth, when not even, probably a half of 1%. So very, very, very concerned still I am for the market. With that being said, if you want to be long, just like we said yesterday on the show, the pullback yesterday morning was an opportunity. We talked about it. You know, we were at 255 on the SPY. We pulled back to 241 in the pre-market. That was an opportunity. We're at 262. We're pulling back here this morning. If you want to be long, here's a pullback for you. I'm saying I think the worst of the news is to come still. So I might nibble in a little bit more stuff here today, but not going all in.
That sounds fair. I can't really say I even feel like doing any shopping. You know, under the current situation, I think that I'm just gonna, you know, sit tight with what I had, and yeah, things got to calm down first before I deploy some, you know, some assets back into the market.
It's really tough to say, like, okay, so if you're buying stocks yesterday at 263 SPY after hours, you're arguing that we are through the worst of this and we're going to see all-time highs again. That's basically your argument, because, you know, let's be, you know, trading aside, I'm talking with the investing cap on. You know, trading, you can buy and sell, buy and sell, buy and sell. I'm buying and selling all day. Don't kid yourself. I didn't just do 3 trades yesterday. I probably did 200 trades yesterday. I'm buying and selling continuously in the day trading account, in the long-term investing account, because a lot of our listeners, new listeners, are investors here. They're not going and making 200 trades a day. You know, you day traders out there, lots of little inefficiencies, lots of opportunities. We've talked about them on the show. But with the investing, when you're looking at here, if you're coming and buying stocks in your investment retirement account here, when they just rallied 18% in 4 trading sessions, I think you're doing it backwards. I think you got to be buying the dips and selling the rips. You know, if you're just a long-term and you're just a buyer, you're buying dips. If you're buying them when they're up 18%, it was the biggest 3-day rally in the history of the stock market. And you want to buy stocks now? I mean, If you're buying them now, you're saying we're through this. There's not gonna, we're going to get a cure basically coming up very soon, and everything's going to go back to normal next month. That's what I feel like if you're buying in your investment portfolio right now. So now this morning, different, 253, you're pulling back a little bit. So maybe there's some opportunities, but buying dips and selling rips has always been the recipe for success. My 20-year trading career, I've always been buying dips and selling rips, and that's worked well for me.
Robin's asking me how am I doing without swimming, and Peloton, baby. I did my Peloton today. High intensity
it's a COVID
ride.
stock.
Yeah,
I'm
it is.
surprised. I'm so surprised, Joel. What time did you get up to do your Peloton?
I was up about 5:45 today. But
what do you do? Do you have like they still have the videos going and you just do their like do you pick a video?
There's a bunch of different there's a ton. There's
is it live? Like is the person live there right
they
there?
They do have some live classes, but I like this. There's this guy Dennis, and he does this different rides, high intensity, rock and roll, country. You could do, there's a tons of things on there. I mean, I certainly wouldn't be using it as much if if I could still swim, but there's yoga, there's stretching. I haven't done the arms thing yet. But I did it 3 days in a row. Then I took a couple days off. And then today I said, you know what? I'm going to have a normal day. I'm going to get up. I'm going to work out. I'm going to, I'm going to shower. I'm going to have some breakfast. I'm going to have a normal day today. And so that's what I did. And Dennis,
so what you're saying is you woke up early to get bossed around by Dennis. So
yeah,
and then you get bossed around by me.
A psychologist would have a field day with that.
Yeah, no, there's a lot of good instructors, but yeah, people do that. I go for walks, do that, man. You gotta get out and go and stir crazy.
Great point to, what you're saying. Add some routine. I mean, if you're in self-quarantine, if you're sticking with the social distancing, adding routine to your life right now is the best thing you can do. So we're trying to develop a routine. I'm not leaving the property. I haven't been leaving the property, but we go outside. I do some yard work. I do some stuff in my backyard. I'm lucky there's a field behind us. Like I'm almost on the very end of the city here. So like the city stops basically where my house is. So I've got a field. So my kids go out and play in the field behind us, but we're absolutely avoiding getting near anyone else. Like, and the 6 feet thing, I'm like 20 feet away from anybody else. I'm staying way far away. Again, I'm in a different situation. Like I said, my boy has severe asthma and I do not want him to get sick. So I'm being very extra cautious with him. Not to get this, hopefully, we're not going to get this. I mean, some people are saying everybody's going to get this eventually, and that's a scary thought. But, I think if you stick around long enough, and you stay away long enough, maybe they're going to have some better, not necessarily a cure, but maybe better, drugs that work a little bit better to help people through it. So I think the longer you can stay healthy, the better chance you're going to have to fend this thing off. So, and let's talk about the overall, macro picture for a second here. I mean, you've had so many people coming on CNBC calling to reopen the economy. Nick Shaheen came on our show calling to reopen the economy. I couldn't disagree more. I said that to Nick. I mean, everybody's entitled to their opinion. The reason I say, we had Paul Tudor Jones saying, he was given a worst case scenario when he was talking. Was it Paul Tudor Jones yesterday, Spencer? I'm having a second thought. I think it was him, wasn't it?
It was him. You're right.
There were so many people I watched yesterday. I believe he was the one that was saying that, and I think his daughter has it, doesn't she? I think she does. Anyways, he's saying on a worst case scenario, you get 1 million cases. And if you take 4% of that, you get 40,000 deaths. But his worst case scenario, I think is a lot of doctors' best case scenario. 1 million cases. I mean, we're already 100,000. Exponential math tells us we're probably going to get 1 million cases. There's probably already 1 million cases out there where we just don't know where they are.
Think about it. What, a month ago there was 100 cases in the U.S.
That was 100,000. You can easily see we could be at 1 million cases in a week and a half. Seriously, that could happen. I mean, we hope the curve is starting to flatten, so we hope it's not going to continue to go up as it is. But let's talk seriously. The math was a little bit funky math going on. That's your worst case scenario. I think that's the best case scenario, that you only get 1 million cases in the U.S. So, and I don't think the death rate's going to be 4%. So he was, high on that, I think, but I do think, the death rate's going to be significantly above 1%. So it's in any regard here, it's scary. So he's calling to reopen the economy. We had Grant coming on, the economist there this morning, saying, we need to reopen the economy. Basically, that we're doing more damage to people by not letting them go outside. And a lot of people believe this. The reason this doesn't work to just reopen the economy, in my opinion, and I think in a lot of doctors' opinion, the reason this doesn't work is because even if you just open everything up, who's getting on an airplane to fly to Disney World right now when the virus is still out there? Maybe half the people. If half the people stay home, or if half the people don't go about their normal business, the economy is still
that's the
screwed.
argument. But that's the argument, that half is better than none.
No, it's not. But that's not the argument. People think it's going back to normal. What and Ackman made a good point. He's like, the break even for the airlines, the airline guy was on there saying it, is 65% capacity. So you need 2/3 of people to go back to their normal routine. If half the people go only back to the normal routine, then the economy's still screwed. So you're kind of in, you're kind of out. I mean, the recipe for success, and people probably get pissed off when I'm talking about this, but let's duplicate the recipe for success. China, Singapore, South Korea has had success, and they're kind of going back to normal. How did they do it? They went to a ridiculous level of quarantine, to a ridiculous level where we watched them weld people into their homes. I watched videos of that. Draconian measures at all costs. You're not leaving your house. We're kind of in, we're kind of out. We're doing the actual wrong thing in Canada and the US. We're to close a little bit of this, close a little bit of that, but people still want to go. We're trying to balance it. You need to be all in. I still say you got to be all in on it. So let's get rid of the disease, because if you just reopen everything, I'm not going to a restaurant. I think there's a lot of people who are with me that probably aren't going to a restaurant. If half the people decide we're not going to restaurants, the restaurant's still screwed. So let's make it safe so everybody can go back to a restaurant. Don't you agree with that? What are your thoughts, Joel?
I do. And I think we're just, with what we're doing, and also what we're doing with the fiscal stimulus, I think we're just kicking the can down the road. Just kicking it farther, kicking the dad.
It's necessary though. What are you going to do? I mean, we
agree.
gotta, it is necessary. The one thing, and I'm kind of with Bernie Sanders a bit on this though. Let's be honest. We're putting, on this bill.
Never thought I heard that sentence before.
I know. I don't like Bernie. Okay. I'm kind of with him though, when he was saying, we're cutting a check to the American for $1,200. Is that what it is? Is that what the stimulus check's going to be, $1,200? But we're putting them 18,000 more in debt. When you add it up, what the debt's going to go up because of this. I mean, where's the other money going? It's going to big corporate to keep the businesses. I know obviously we like businesses, so some money has to go over there. But it kind of feels like the little guy is getting a raw deal. I kind of agree with Bernie Sanders on this. You get $1,200, and we're going to go like, another 3, 4, 5, 6 trillion in debt, depending. I know 2 trillion's only been passed, but they're talking about the other 4 to bail out the other businesses eventually. I mean, it's tough. Like I'm not a fan of Bernie Sanders. We know he's trying to put me out of business. He hates Wall Street. I'm Wall Street. But I kind of think he has a point there. That the stimulus
he doesn't just hate you.
What's that?
He doesn't just hate you. He hates a lot of people.
He hates me too. Yeah. I'm saying I don't hate you, Bernie. I kind of agree with you on this point. The stimulus check to the individual should have been bigger. $1,200. That doesn't seem like enough to get the individual person through this. I mean, you could blow through $1,200 in a hurry. And then somebody was saying the checks aren't going to come out till May. Well, what the hell? They need money now. I feel sorry for the individual person. The person living paycheck to paycheck is having a real rough time with this right now. You think I'm having a rough time? I'm still doing my job. I'm, got food. I've got enough money to survive. I feel bad for the person living paycheck to paycheck right now. And apparently it's 30 or 40% of the U.S. economy lives paycheck to paycheck.
Got a little rally going on here, a little mini rally. I don't know if that's buy and balance or
it's probably Cooperman.
Cooperman
on CNBC. Cooperman's on CNBC. He's talking. I don't know what he's talking about because we're doing our live show, but he's probably rah the economy. Don't borrow money to buy stocks. Well, that's a good tip. I was just looking at the CNBC headline. That's a good tip, Leon. We agree with you. Don't borrow money to buy stocks in your investment account. You can trade on margin, but you're investing on margin. I never liked that idea.
I'll be honest, Dennis. I'm still a little bit shook from that number yesterday. Like I wasn't able to stop thinking about it.
People are hurting.
Like it blew my mind so much that I kind of was like thinking about it all day.
People are hurting out there. They need the money, you know, if the checks don't come for a month, that's real bad. I mean, I feel so bad for all those people out there, you know, and maybe we can all donate and help out a little bit there. But really, the big money's got to come from the government. I mean, you can have individual investors, you know, wealthy investors trying to help out a bit, but the big money needs to come from the government, from the taxpayer dollars. I mean, if they're only getting a check for $1,200 and that's supposed to get them through the next couple months, that's real tough.
Okay, so bringing it back to the market here, we're gonna close green for the week. It's safe to assume.
That's unbelievable.
Probably
That's
a
good
red
news.
day, probably a red day today, but a green week. So like, what does that tell you going forward here? You said this has been the, you know, best 3-day rally in the history of the stock market, at least in modern history. So like, how do you approach this going forward? You said you're not gonna chase stocks up here, but
Nibbling in the
gotta
pullbacks.
take
You got
into
another
account.
pullback this morning. It always seems to give you a second chance. I mean, this isn't the market that I don't think we're going to V bottom. If you think we're going to V bottom, then I guess you got to buy this morning if you think you're going to V bottom here. But all the logic says this is just in the early innings still. You know, we haven't even, in a lot of cities, they're not even, you know, their hospitals aren't even, you know, getting the cases yet. We know the math says it's coming. The math says it's out there. The math says in 3-4 weeks, our hospitals are going to be overwhelmed. I believe the doctors, not the economists. And if you're listening to the doctors, it's hard to just come in here and buy everything. I mean, it's been a nice rally. Maybe the low isn't. Maybe the 220 low isn't. I think we retest it though, and I think you get another chance down there. So I'm not going to come in. And I think about how many businesses are still hurting here. I mean, even think about Disney. It's had a significant rally. I love Disney. If you would have said to me 4 months ago that I was going to get a chance to buy Disney under $100, I'd be backing up the truck. But under these circumstances, you know, they're not getting any revenues from the parks right now. A lot of the other stuff is on hold, and they have huge expenses. So under these circumstances, how long? How long are they going to be hurting for? How long are people going to be scared before they go back to Disney World? It could take a while. We could take a year before people get like really back to confident, even if we're allowed to go out and we think the virus is gone in 6 months or 3 months or 2 months. I mean, it's going to take the confidence of the consumer a while to go back to places like Disney World and to go to hotels where there's a lot of public people and where there's a lot of crowds. So with that being said, am I going to buy Disney at 105? I mean, it was there. Put this in perspective. Disney was at 105 at this time last year. So, you know, if you go back March, April, it's 110, 105, and yeah, in April it hit 107. Now with all this new information here, you're giving it the same price? I think no. I think, you know, it's you know, I think I get a chance on Disney back at 80, 85, and maybe I'll take a shot there. But I'm not chasing anything. Not in my investment portfolio. I'm not chasing.
Something else to think about. This is from the chat. Good point. How much do you think the end of the month could factor into this? I think the 31st is on Tuesday, so we only got a couple of days here until the end of the month. Maybe you see some window dressing, maybe not. I don't know.
That's tough. That's end of the quarter.
Oh, we're not at the end of the month today,
right?
though.
No.
Are we? 27, 20, Monday.
But no,
no, Tuesday.
No, Tuesday. That's what I said. But end of the quarter is a better point. End of the quarter. So do you see like end of the quarter window dressing?
Yeah, they might happen. It might happen. Maybe we get a pop into the end of the quarter. Maybe that's the top. I mean, if we get up like to the 50% retracement of the overall move, what's the 50% retracement of the overall move, Joel? 340 down to 220. That's 120 points on SPY.
Yeah,
so about 280. 280.
Yeah, I figured it. It was for the SPOOs. It was 33. Yeah. That's yeah. You had a 1,200 point break divided by 2 plus 2174.
It's possible.
2782. 20. For me, for some reason, I'm thinking this. I think this market is going to do some work in the 2400 handle. If we can stay out of the 24, I'm talking about next week. It just seems to you know, I'm trying to look ahead to next week and I'm looking at my levels and I'm assuming the high for the week is in at 2634.50. I just don't think we're going to give. If we do, then I'm a monkey's uncle and that would be great. And the low is in at 21.74 for the week. And I'm pretty sure about that. We're 400 points off it. And then if you take a close anywhere here, let's say we close right here at 25.50. My weekly number is going to be in the lower 2400 handle. So I don't know if I'd be very impressed is if we hold above 2,500 today, and when we're talking next Friday, if we're still in this 2,500 area, I think that'd be a major victory for the market. I really do. That's what I'm looking at on a weekly basis.
The sentiment has turned to a certain extent. We'll give the bulls that. The sentiment's turned. People are looking to buy the dip. People in the Wall Street are rah. Stocks are going back to highs. There's a lot of people that think that. I don't think it. But the sentiment has turned. It's harder to make money shorting on the last few days for sure. So I don't know what the catalyst would be to turn it. Maybe we are just going to be bottom. I don't know. I don't have a crystal ball. All I'm saying is I'm not confident enough in this market to put all my money that I sold back in. Not here. I like I said, yesterday I nibbled. We got down to 241, 242. Bought some Qualcomm, bought some Activision, I bought some Kroger. I did nibble in. That's the first time I bought stocks. We pulled back. We talked about it. And I've been trading, like people saying, oh, you missed the rally. I've had my best trading week last week in 10 years. So I didn't miss anything. So don't worry. I'm doing okay. I'm doing okay with the trading. I'm talking my investing hat.
I think it's good to talk about that.
Because I'm trying to talk to the investors because there's a lot of people who are listening with their investing hat on. If you're chasing stocks when they're up 20%, I think you're doing it wrong. Could we go up another? We could go to that 50% retracement. We could get to 280 SPY. That could happen. That could happen next week. This market's rolling right now. It could. I could see it. But I think the path of least resistance at this point, I think I'd be more inclined to lighten up if I was too long. I'm not going to lighten up probably anything on my own because I already lightened up. I lightened up before this thing started. But I'm not that nervous that I'm going to miss the low here. I think I'm going to get another chance. I think I'll get Spinner. I think I'll get another chance in Disney in the 80s. I do for my long-term account. So I might be wrong. And maybe I'm going to regret it. Maybe Disney's going right back to 140. But you think about the logic that takes us there. A cure is the only way I think the stocks get right back to all-time highs. If you come out with a cure tomorrow, everything changes. Overnight, everything changes. So I'm still comfortable holding a significant amount of cash because I think the worst is still ahead of us, to be honest. I hope I'm wrong. I really hope I'm wrong. And I'll participate with my 20% of stocks if I'm wrong. But at this point in time, I'm not comfortable enough to say the worst is behind us and I'm going all in. There's some people who think the worst is behind us. I don't think so.
So a few weeks ago, I talked about how I was approaching this in my longer term accounts, and I've been automatically investing in one. I don't even think about that. And then there's another one where I did have some cash, and I put 2 rounds to work, and I've got 2 rounds left. And I said, I'm probably going to miss the bottom one way or the other. I'll miss the bottom on the way down, and I'll miss the bottom on the way up. And so, like I said, I made 2 rounds of buys a couple weeks ago, and I'm sitting on 2 right now. And now I'm sort of not sure what to do. I talked to Big Game. I talked to Big Game a few weeks ago. I talked to Big Game like, I'm just gonna invest without trying to pick a bottom. But now that we're gonna have our first green week here. I've got 2 more rounds that I don't know when to use them.
Spencer, did you put some new signs up?
Every day, Joel. Every day is a new
short my diet. What's your diet? Talk about your diet right now.
That is the king. That is the king of shorts right now. I will tell you my diet. Okay, I've eaten more Fruit Loops in the past 10 days than I have in the past 10 years. Okay, this is guaranteed returns right here. Okay, 10-1, 20-1 returns.
Short my diet
on that trade right there. It. Okay. Tell maybe I'm not sure because I may be getting bullish here. These signs for the past couple of days, I don't know. But yeah, new one every day until I run out of space. Quite frankly, don't know how long that'll take.
All right, we're getting asked here about Zoom, and someone's looking at
which Zoom.
Yeah, which Zoom are you talking about, Joel?
The only reason I asked that, is
give
because
us the details on this.
The SEC, I read, halted trading. Or the SEC can't do that. Or can they? Maybe they can. The SEC, I think, suspended. Or if it wasn't, it was OTC markets. Zoom, ticker ZOOM. And I think we talked about this like a couple of weeks ago. Maybe we didn't. But regardless, last Friday, ZOOM got up to $60. This is not the same company whose technology we use, but it is same name and a very similar name, Zoom Technologies. It sounds like it could be the ZM that we all know, but it is not. I couldn't believe my eyes when I saw that it got to $60.
I just looked at the chart too. What ridiculousness.
That's why I asked what Zoom, Joel, because there are two. Well,
are people really this dumb? Like,
look,
I know I don't usually say that, but this is just stupidity. I mean, people are buying the wrong stock.
Like, part of me is like understanding about it if you're maybe making a trade on your phone and
the SEC has to halt it because people are buying the wrong stock.
Yeah. Well,
holy cow. Okay. Listeners, make sure when you're buying a stock that you have the right ticker symbol. Make sure it's the right company.
This has happened before.
I've never thought I would have to actually tell people that, but there's obviously some people who are out there buying the wrong stock. We've seen this happen before too with Zoom. We saw this happen like a year ago, didn't we? I remember talking about this before. I'm like, they're buying the wrong stock. ZOOM is not Zoom Video ZM. Zebra Michael. That's the symbol you want. So anyways, I guess the SEC halted, so maybe we won't have that problem anymore. But it's ridiculous they have to halt a stock because people are buying the wrong stock.
The person in the chat, I can't remember who it was looking for a potential short squeeze today. I mean, it's up $5 here, 568.
On Zoom? You're talking Zoom?
Yeah.
He's talking the real one. Yeah.
The real Zoom. Zebra Michael.
Yeah. 165 to 134. That's a 21-point move. So call it 10.5. Boy, you're right at that 50% area right there. Because 47 to 49. I think if you could, and your 2-day high is
2 inside days, Joel.
Yeah, look at that. Oh, this baby is winding up.
It is winding up.
Yep, it's winding up. I'd say go with the Mo and 149. That's right at the 50% area. You could get a squeeze because there's not a daily high for $6. On the downside here, this called 137. That splits the two lows from yesterday and the previous day. So under 137, I would look out on the downside here. So nice setup here, and going to be using Zoom this weekend for my niece's shower. We were supposed to go to Chicago.
It's awesome.
Too. Yeah,
we use the Zoom every day. I love it. The valuation, as always, kind of kept me away from my long-term account, but I've had a couple trades on this. It's a COVID play. It's setting up here well again. I would say if you're going to stop out, maybe go to that low from 3 days ago, like 133. It's kind of a long ways to go, but in this environment, I mean, you got to give it some room or you're going to get stopped out on everything. I mean, I actually like the setup here. But again, remember too, this kind of moves counter to the market right now. So when the market's down, Zoom is up. If the market starts ripping, Zoom will start coming back down. This is actually negatively correlated with the market right now because this is a COVID play. At least that's what the market is trading it as. So that will change eventually. And I do love this. So the product itself is top notch. We think about all the issues we had when we were trying to run on Skype and trying to run it, on other ones. We had live stream different ones.
Yeah, it was harder. It was harder.
This is unbelievable. We have no hiccups here. This Zoom video is awesome. I mean, you can see, look how well you can see, that I haven't showered in 3 days.
Knock on wood.
Yeah, Dennis, what the hell are you doing?
I'm a mess.
What are you doing? You don't trade during the day.
I was trying to compete with Grasso. Did you see Grasso on CNBC? They were asking, did you lose your razor? Is your razor quarantined? I mean, mine is too, apparently. Got this hair going on, this wicked hairdo. I don't get haircuts. I don't shave. This is what happens when you don't leave your home.
Good thing there's not like
personal hygiene, more to be desired.
Good thing
short my personal hygiene.
Good thing you can't smell on Zoom.
Not yet.
That's coming.
Let's look at a ticker. Let's get some stocks in here. We got Raz. We've been rambling on here.
Yeah.
Rambling on.
Raz coming in 5 minutes. Let's do it.
Okay.
What about USFG? USFG for Nick Bellucci. Boy,
that's not a symbol.
That's not USFG.
USFD.
That's all you got for me, Joel? A stock that's not a stock?
Oh, US Food. US
Foods.
USFD.
I don't know.
USFD is US Foods.
Sorry.
Okay.
I don't know. Man, I guess what food do they make? Is it for restaurants or something?
Yes, that's the problem.
Yes, it's all for restaurants.
Yep. There's a big separation. Cisco, SYY, USFD, those are restaurant food delivery services. So that's why those have been hit really, really hard. Obviously when we've seen other food stocks that got the nice lift, the canned food stocks for a while.
Yeah, interesting.
So this has come back. again, this is, if you're buying these, you're buying McDonald's, you're buying well, you're not buying McDonald's, but you're buying the restaurants if you're
Supplier.
buying
Yeah.
these. It's had a big move. I mean, the stock got down to $8. Now it's 18. If you're coming in now, I feel like you're late to the party. I feel like you're going to get a pullback eventually here. So maybe today's pullback of 60 cents is enough for you. Maybe this thing goes back to 25. Maybe we V-bottom. I don't think we're going to. So, most of my stock stories are going to be the same as my market story because everything's moving together.
Just take a look, Nick. My patented 50% retracement on this. If you're looking to enter, you went down $8, $8.32. Holy macro, and you got up to 1971. Let's call that a 12-point move. 14-15 area. A great area of support because it's backed up by the pair of lows from Tuesday and Wednesday. So I think that'd be my sweet spot for me here. And if I was shorting it, I'd look to bring it in during that area. Also, I was in the pro chat yesterday and people were trading a lot of different stocks, and I was kind of getting a feel for some of these people's styles. When these stocks like Tilray made a run and Smile Direct Club, did you see what that did yesterday? That thing, what was there news on it yesterday?
Holy.
Was there news?
I
don't
didn't
know.
see anything, but holy, I did not even
That's a
notice
squeeze
that.
from hell. There's been some big
Holy.
squeezes happening here.
Yeah.
Big squeezes.
Tilray's big. Tilray's a big squeeze.
Tilray was a huge squeeze. Tilray's still going this morning. He can't even stop it even on a down day. That's a big squeeze.
Just the two things, and I just happened to be looking at the chat and looking at when it had that spike up to 686, and it filled the gap. It had a gap to fill at 646 from March 11th, and I know it went beyond it, but man, a lot of times on the dailies when we get those gap fills, it could signal a reversal. And then I know people were still trying to buy it, on the pullback. And I just was looking at mid-range on the session, 550. That held up a little bit. So if you were trying to scalp it, thinking going back up, but when it took out mid-range on the session, I mean, you had to get the hell out of the way here. And it ended up falling, I don't know how low it got before it rebounded, but just a quick tip there. If you're trading intraday, nice rebound here in the S&P 500. We're back up at the 2550 handle. Probably have an inside day, right? Today, maybe.
Yeah, you know what? We could. It was a big candle yesterday, so we could.
Yeah. Yep. Let's see
here. It's a good
here.
thing. Volatility coming down.
Go ahead, Spencer. I'll let you take the lead.
Yeah, well, can we talk Lulu? Because they had earnings after the close yesterday, and I'll bring the chart up right now. Lululemon reported Q4 EPS above estimates, $2.28 versus a $2.24 estimate. Sales of 1.4 versus $1.38 billion. Comps for the last quarter were up 20% on a year-over-year basis. They have reopened all their stores in China, except for the stores in the Wuhan province. But by and large, they are back up and running there in China. And the market actually didn't really move too much.
It's kind of been a muted response. $7. It's a move, but sometimes Lululemon moves a lot more than that.
Yeah.
It's a tough one too. I mean, all these charts look the same. You had a huge down move. Yeah. You're basically back to the 50% retracement of the overall move. So I'd say you got a little double top there, 202. So I'd probably be more inclined to sell it as opposed to buy it up there at 202. Love the company. It's always firing on all cylinders. When the markets eventually do normalize and we come back, this is going to be one of the good ones. So this is one I would put on my shopping list. I'm not buying it at 200 when it was 130 though 5 days ago. So I think you're chasing it now.
Yeah, boy, that was a big old move.
It was when they thought every retailer was going out of business.
I don't know if you're not going to get a look at it today, but 166 would be half of the rally that it had here. So if it comes back into the 165, 166 area, that'd be your 50% retracement. If you're looking for support, you better hope 180.10 holds. That was your 3-day low. Look out after that lower 165 handle. But I think that when you have something move off a low like you did here, and I think you're going to see this in the market as well, you're going to find some buyers. There's going to backing and filling is what's going to happen now. And I think that's what you're going to see here in little shorts. It didn't quite get out. Maybe, I don't know. It's a funky looking head and shoulders bottom though. Not much of a left shoulder, but that's what I'd be looking at. But I mean, these retailers and, retailers and restaurants, I mean, jeez, I don't know. I mean, when things do get back to normal, people are going to go out and buy $120 yoga pants. I mean,
Probably. They'll probably spoil
I'm
themselves.
returning mine. I decided to return mine, but now I can't leave my house, so I can't return.
I like the Lululemon story. I mean, I'm always amazed when you go to the mall and the malls are dead, but the Lululemon story is always busy. I mean, you can't argue with success. They have had a successful story. I would love to own this stock on a pullback. This is one I will put on my shopping list right now. I will put this on my shopping list. I'm absolutely not buying it at 200. I think I get a shot in the 160 area maybe.
Yeah.
Again, you get a shot. But it's on my shopping list. Lululemon just got added to my shopping list. I like it, not at 200, not at 194, not on this move and not in this environment. I think we get a chance down there lower again. I'm wrong. I could be wrong. We don't know. Maybe we're going to V-bottom on everything. I don't think so though.
What about KB Homes here? KBH also had earnings after the close. They had to withdraw their guidance. I can't say I blame that decision. Their EPS beat, their sales beat, but this one is much more ground zero for an impending recession. So I'm not sure what you do with KBH here.
It's up 100% in 4 days. Let's think about that. It's up 100% in 4 days. So yeah, you can say, oh, it was at 40, it's at 19. I mean, you talk about chasing. A stock is up 100% in 4 days. I'm not buying any stock that's up 100% in 4 days. Could it go up 200%? I guess. This market stocks go anywhere, but I'm not chasing it. I'll wait for a pullback.
Bill
not
Phillips.
Going on my list though, because I don't know where. Here's a good question. We don't really know what's going to happen to the housing market at the end of this. In likelihood, housing prices are probably going to go down. So if housing prices start to go down because wealth is lost when this thing, materializes, it's not good for new home builders because new home builders compete with existing houses. If you're building a new house and it's going to cost you $350 or $300 a square foot or $250 a square foot or whatever it is, but you can go buy an existing house for half that price, people might go buy that existing house. This is, the issue. Environment couldn't be better. Zero interest rates, all of that. But I do think you're going to see, I think the housing bubble probably has burst with this, if there was a housing bubble. In some areas,
I don't know. Okay, maybe in some markets, but not in
some markets, it was
market.
never a housing bubble. And in any markets where the prices had gone up substantially, like Toronto prices have basically went up threefold in the last 10 years. $200,000 house talking worth 400, 800,000 now, or maybe $1 million. You can hardly find a house.
Toronto's bad.
So you think about environment's good for them still because low interest rates, but the problem is, I think you have some people hurting here, especially if the unemployment rate goes up. You can see some houses go for sale, and that's going to impact the home builders.
Real quick, someone asked about Capri Holdings. They're a clothes maker, aren't they? Capri Holdings. Someone help me.
That's retail.
Yeah, retail. I mean, tough sector here. Nice little move off the low, doubled off the low. So if you're looking for a pullback, more than doubled. 542, 1410, 9. Maybe if it comes back into the $9.50, $10 area, 976 is your 3-day low. But once again, retail, it's tough, right?
A lot of retail. I think this is a apparel maker though. Is this like, don't they make clothes that are going into the stores?
Yes.
It's a little different because you can buy that. Those have held up better than the actual stores themselves. So I don't know if they have actual stores, Capri. I don't follow the company close enough, but I'm pretty sure it makes clothes to sell in the stores. Little different story. I mean, it got down to $5, up 150% in 5 days. So absolutely, you're chasing if you're buying it now. All these stocks, if you want them, put them on your shopping list. But again, I would wait for pullbacks. But if you can't stand it and you got to own stocks here, you got to do what you have to do. But for me, for my own personal money, I'm waiting for pullbacks.
All right. We are joined by a pair of guests now. Jason Raznick and a special guest.
Oh, nice.
Jason, good morning.
Good morning. Good morning. Can you hear me?
Yes, we can. Who is that to your right?
I don't know. Come say hi.
Hi,
What's your name? Introduce yourself.
Josh.
Josh what?
Raznick.
You have any stock picks?
No.
Yes, we want to hear
Right
Josh's
away.
stock picks.
In
That's
the
it.
Come
camera,
on. They want
What's-
picks. Josh, you got a stock pick.
What's your favorite product you can play with? What do you play with often?
On my Xbox.
And what game did you just buy?
I just bought Minecraft.
He's playing the Xbox. That's Microsoft and Minecraft. I don't know who owns that.
I don't know who.
And he plays
I don't know who
Fortnite.
I think Fortnite's private.
It
I'm
is,
not sure.
but Microsoft is not private. Microsoft is Josh's call.
Yep, Microsoft's your
All right.
call.
I love Microsoft. Josh, it's a great stock pick on pullbacks. I absolutely love Microsoft. It's pulling back $4 this morning. Maybe a nibble on some Microsoft even this morning. We were talking about stocks that need to have more pullbacks. Microsoft actually, on the pullback here this morning isn't that bad. So you know what? I love your pick, Josh. You've given us a good one.
Say thank you, and then
Thank you.
close the door, and I'll see you later. Close the door. Close the door.
Go blue.
Close the door. Hey guys, how are you? Good
So are you
morning.
buying
Good.
Microsoft? Jason, are you going to buy Microsoft in this poll? I actually like this chart. I actually like Microsoft around 150. I don't mind this one. I'm putting Microsoft on my shopping list right now because it's Josh's pick, and I actually might strike on some today.
Yeah, and it was at 195 recently,
Mm.
or 190s. It's interesting. So this is the kind of market traders love. You gotta be careful and be nimble. I've kept my puts on. So as the cruise lines have gone up, I mean, I was shorting Royal Caribbean and buying more puts on Royal Caribbean at 44 yesterday, or 43, and Carnival. You guys were talking about SSY earlier. My favorite play in that industry is Americ. Is it AMRK or
ARMK, yes.
ARMK. I bought more puts on it yesterday. It's at 20 now. I started this one at 29, covered it 15. It went down to 10. And then yesterday went short again.
Putting it back on.
Yeah.
So you're selling the rips. You're doing it the way you're supposed to do. Selling the rips and buying the dips. Jason Raznick must listen to pre-market prep.
I'm not going to be perfect on it because America went down to 10. I'm not, you can't get the bottom and the tops, but like I use these pullbacks. Now I bought a controversial stock yesterday, Peloton. I
like that too.
Literally 3 out of the last 7 people I've talked to, they've all bought Pelotons. Like, and that's an expensive buy. Services like, their wives don't have the gym anymore. They don't want to hear their wives complain. So they all bought, not the stock, the actual product. So 3 out of 7 people I've talked to bought it. I just think they're going to have explosive numbers.
I wrote it this morning, Jason. We actually got one before this all happened, and I'm really glad we did because it just it's not like my other workouts, but it's good. It's had a nice bounce here. It looks, I don't know, it looks like it has a little bit of a lid on it. Haven't purchased it. I don't know.
Agree with you. I totally agree with you, Joel. It has a lid on it right now, and I think it's going to go down to 23, 22 before it gets over 25 or 26.
Yep.
And I'm buying more. I'm doing 3 increments for
Okay.
Brent just wrote me ARMK. So yeah, that's right.
You know what'll kickstart Peloton is if it gets some media attention at some point in time about being a COVID play. Like if Kramer was to say, he comes on, with these COVID plays on a Mad Money and say Peloton. I'm not saying he's going to do that, but it has the potential because this is kind of a coronavirus stock. I mean, people are not going to the gym. They're looking at these things and saying, well, I can't leave, to go to the gym. Maybe I need to get one of these Pelotons. And it's like the gym comes to me. So that's why the stock has held up very well. I mean, if you look in the last month, Peloton is hardly down. It actually looks to me like it wants to go. I would not be surprised if the stock saw 30 in the near future. So I actually like this one too. We should have you on the whole show. You give me Microsoft. I actually like people give me stocks. And I'm like, oh, I don't like that. I don't like that. You give me 2 stocks, Microsoft, Peloton. I like them both.
I know. I got some more. Hold on.
Wait, hold on.
Dion,
2 things. Jason, Dion H is asking if Jason is part of the Benzinga team. Okay.
Like my
Jason is Benzinga. Okay. He created Benzinga. And so he's our leader in chief. And then they asked what puts you were looking at in Aramark, what month and what strike.
Okay, so they're on my screen. It is the April's 19 strike price puts.
Okay, giving yourself some time. Excellent.
Not a ton of time, but
a little bit of time. A month is a long time in this environment.
Yeah, you get a lot cheaper. this company, these numbers, I don't know how it even stays afloat right now. I mean, I know the company intimately well, so I just don't know how it, how it's functioning right now. But a lot of these things bounced. I mean, Royal Caribbean went from $24. I shorted that one from, you guys know I shorted that one for a while. It's went to back to $40. I don't know who's booking a cruise in the next year. I really don't. I'm sorry. Even if this thing's solved, I offered to buy Brent News Desk. He's on the news desk at Benzinga Pro. If you're not using Benzinga Pro, you should use it. I offered to buy him a cruise, him and his girlfriend, fiance. And he's like, Jason, you couldn't pay me and my girlfriend $1,000 to go on a cruise, like in 3 months. Couldn't pay him.
Wait,
So he was my catalyst to short Royal Caribbean.
So you're saying the Benzinga Booze cruise is canceled?
Yeah, I guess so. Yes. The
Ah.
Benzinga Booze cruise is canceled.
All right.
Okay.
What about the airlines, Jason? You doing anything in the airlines?
So Delta is my play. I have not traded Delta. I have not, in the past 3 days. I am not back in. I mean, it seems like obvious that they're not going to let the airlines fail, but I like trying to find like stuff that not everyone's talking about. I'm doing a little bit of other things. Like you guys here, do you guys want a low price stock that I've been playing? And I think you guys may enjoy it, but it's not for one that you can just sit and settle down on. This one, the symbol is TASK. T is in Tom, A is in Apple, S is in Sam, T is in Tom. TASK Carol's Restaurant Group. It's basically owns a bunch of Burger Kings. It's a restaurant conglomerate. It's like a binary play. This is one that's either going to go to 10 eventually or 9 or 10 or not be in business. The reason I liked it because it has a lot of drive-throughs and the stock was trading at 130, 140. There were some insider purchases. So I've been buying this in the 132 range, 140 range. This morning, it'll probably open a little down as my guess, but it's at 210. I think you guys should put it on your radar as a restaurant play that's low price. It'll be volatile, but it's one that you can load up on and watch it carefully. I mean, I know the company also intimately well. So this is another restaurant play that don't expect it to rise like today, tomorrow, but this is something as we get out of this and, and the restaurants and they get this cash infusion, it's one that has been fun to trade.
Jason, I had no idea that you nibbled in such stocks.
In such what, Spencer? You broke up.
I had no idea that you nibbled in such low price stocks.
So I didn't find this one. I have a friend that knows intimately well and told me about it. And I'm one to know that I know very little and I know what I know. I know my Teslas. I know certain things. I know my Smile Direct. I don't know if you guys have played SDC. This is one that I know intimately well. 2 of the 3 co-founders of the company I am friends with, know them very well. So SDC, if you guys take a look at it, the last 2 days it's been ripping and gripping, and that's a low price stock, but one that I know that company as well as anyone on the street. And so this one I don't know as well. This one I don't know as well, but my guy who gave it to me is the smartest guy I know in the restaurant industry, and he said it's binary. Like if they keep their cash and they keep it, and they keep the Burger King drive-thrus open, this is a play that in 6 months to a year will be at $8 to $12. Mark it down, Spencer. Put a calendar item on your Google Calendar for $8. That's where I'm playing it. I bought a decent amount, but the binary option is if they don't have their cash thing right, it could go,
What about Tesla? Getting down and dirty in Tesla?
So, France, I sold 10 to 15% of my position. It went to 960 actually, and my wife, or not my wife, my friends, you got to sell it. I sold 10 to 15% of my position at 910, and I kept most of the rest. Actually, I sold some at 730, and then I bought some more back recently, actually. So I'm still very long Tesla. I think it still has the best pipeline of any auto company in the world. The battery day that was supposed to be April 20th, which I don't know if it'll still be that day, is going to be unbelievable for people that are afraid of being able to drive distances on a one charge. Wait till battery day. I don't want to say more because I don't want to be wrong on what the new battery technology is going to be, but it's some groundbreaking stuff from what my sources are telling me. Not here to pump the stock. I own the stock and I'm not going to move the stock. There's a lot of investors. The other thing, yesterday I had a guy reach out to me and said the Ford Mustang is going to destroy it. You got the thing I keep telling everyone, these other auto companies can't really compete with Tesla. They're set up for making money on service. All those auto dealerships make money on service. Electric cars have 40% or 30% less parts. They have way less maintenance, way less work. They're not set up for that. It's disrupting your whole company. It's one of the reasons why Yahoo never became Google, because Yahoo wasn't willing to disrupt its whole internet directory. And Google said, we're just going to focus on how many people like links on search. These are things that's very hard for big companies to change their model. And you'll see where we're going to be 2 years from now. I'm not saying to you Tesla is a screaming buy today, but yes, I'm very long Tesla.
Jason, I've been wondering, and maybe you know this. Tesla, I believe, they're making some materials, right? They're making some ventilators or something, right? Or they're trying to.
So two things on that, Dion. Mentioning 500, 600 miles and actually doing and delivering it are two totally different things. Ford said they're going to have an electric car 4 years ago, and it's been 9.5 years now. There is no electric car on the market, sir, that is even competing with the first Model S from 8 years ago. On the ventilator stuff, Tesla was working with Medtronic. Elon Musk did deliver a bunch of masks or ventilators to some guy's house and then delivered it to a hospital. So they've been playing in that area too.
Well, but I've been wondering, are these companies that are they getting paid like on this stuff? Like GM is making ventilators and retail is making masks, and are these companies all getting paid? Like, I don't know. I'm asking.
So I don't think so. I don't think they're making money on these ventilators. I think they're doing it out of the goodwill of the world. And I mean, they're not producing right now. So the quickly they're back to production levels, then the quicker they can start. The quicker this gets solved, the quicker they can start producing. I don't know if they're selling them. I haven't seen that. I haven't seen a buy order, because you do see buy orders. Like yesterday, or 2 days ago, 15 million was given to Javits Center to convert into a hospital. So I haven't seen that for Tesla. I am surprised that Tesla's not even more in this. I feel like whenever there's a huge worldly problem, Elon Musk likes to be in the middle of it. So I'm surprised he's not even more so in it. But I wouldn't be surprised to see more happening from the Tesla front with this. I know he's not a doctor, and that's probably, something you can't solve.
Jason, anything else on your short radar in the near term?
So I just did a couple. I just put it. Let's go to my shorts. I just put a couple more shorts in yesterday. And guys, I just want to make sure we're clear. We're talking about some of the picks that are winning on. There's picks that I'm losing on too. Like you're not going to always get the timing right. And I know Luke mentioned it yesterday on the show. So like Royal Caribbean. So Royal Caribbean, I just told you I shorted some yesterday at 43. I shorted a little more at 39. It's at 60.61. It hits 42 again. I have another sell short order on it. One I went long on yesterday, and I know you asked about shorts, was New York Times. This was another one from Luke on our team, Benzinga. Traffic for media sites is high, and New York Times has a paywall. They're definitely getting more subscribers. When they report earnings, everyone's earnings are going to be bad. I think New York Times will be strong. The bear in the chat room just mentioned, well, what about the advertising revenue taking a hit?
That was my point. That was my point. Yep.
I was guessing you were the bear in the chat room because there's a bear.
No, I'm not. But that's what I told Luke is I'm worried about their advertising. So.
Yep. But the subscription revenue is what people are really looking at, because when you look at these kind of companies, if you can convert it into a SaaS type company like a Salesforce or a HubSpot, one of my favorite stocks, HubSpot, but the MRR, recurring revenue, makes these media companies way more valuable. So think of the revenue from a subscriber as 6x the revenue of an advertiser. So if you have $100,000 a month coming from an advertiser versus subscribers, value that at $600,000 a month versus advertisers. That's the way to look at it, Spencer, and it makes a gigantic difference. So I'm building a position in New York Times. What other ones on the short side that have gone up? I mean, Square has been really fun to trade, guys. I mean, if it hits 60, I think that's it'll be too quick on this one. And so I may short it. I'm longer right now. I may short it. My reason for shorting Square is because most of Shopify is one of Kramer's favorite. I'm not in Shopify. I missed that one. But Square, most of their customers are actual physical retailers. They're
Yep.
not the virtual ones like Shopify.
Yep.
So Square has been fun because it has a lot of built-in traction to go long when it went down from $94. Trust me, I know I was in at 94 down to like 45, 40. And so I was buying it at 40. And if it hits 60, I may go short it again.
Dennis, any looking at imbalances here?
Mostly to the sell side, so I don't see this ripping and going the other way. They're not huge though. They're just like, it feels like it's kind of where it should be, the market. When I'm looking at the opening imbalances, I see AT&T 359,000 to sell. Just going across board, UPS 51,000 to sell. They're all sells. They're mostly sells, and they're there, but they're not like crazy big that I think the market's going to continue to tank here. I feel like the market's kind of valuing, you know, right now when we're down, we're talking about being down 8 points on SPY. I feel like that's kind of where we are. We're in line with the imbalances. So I don't see a trade here like I did the last couple days.
See, Dennis, I mean, I'm scared, not scared, but yeah, a little scared that the market's going to really take a hit today because 2 days in a row, right? Or 2 or 3 days in a row so far.
We're up
all week.
18% in 3 days from the lows. 18% run in 3 days. It's been an incredible run. A
So
nice squeeze. But
Yeah,
I don't think it's much more than like, you know, first it was ripping and a few believers popping in, but I still have the opinion that there's a lot of bad news coming here for this overall market, which, you know, I'm scared of. I hope I'm wrong, but, you know, when you start looking at the math and you start looking at New York City and start thinking, you know, you listen to Scott Gottlieb, you know, on CNBC, and he's saying he's worried about a bunch of cities, you know, being the next New York in the US. I mean, I've been listening to the doctors the whole time on this. And that's why I've been underinvested. So I've been listening to the doctors, not the economists.
Totally agree. And wait, another stock, I'm going to go back to what you just said, Dennis, in 1 second. Another stock, Spencer, that maybe viewers in the chat room and Benzinga Pro chat room should look at is Planet Fitness. PL.
Yep, PLNT.
Okay. This
For a
stock
short, I hope.
This stock went from $25 to $90, $85, went down back to 25. Now it's at 48. I got in at 38 and I sold yesterday. But if it gets back to like 42, I know you said a short, Spencer, and you may be right. Here's the thing, man. The members are only paying $10 a month. And I just think you're going to see a 1 month, 2 month blip of revenues down there. But I don't think this is going to be something that members are going to cancel. The Planet is closed for the month of April. They can't charge customers is what I've been told. But I just don't think they're going to cancel. It's such a cheap option, Spencer, that businesses that have recurring revenue, I fucking love. Like those are the ones I love.
Whoa!
Like,
That's only the second time an F-bomb's ever been dropped on the
Second
show.
time
That's
F-bomb
okay.
dropped on the show.
So he's the one that'll pay the fine.
I'll pay the fine. I was gonna say freaking, but I'm like, you know what? There's no time to censor.
That was awesome.
The CFTC.
No, but
He pays the bills, so.
also I know from secondhand experience that Planet Fitness is notoriously hard to cancel. So people may just be deterred because of that. It's just kind of a pain in the butt to cancel.
The chat room's going crazy right now. Whoa!
They love that comment. Maybe we should cuss more on the show.
Yeah, I don't know. Maybe we should, Dennis.
Wait, and Dennis, so that was Planet Fitness, but I want to go back to Dennis's thing about the medical stuff. I think listeners in this room should really take heed to what Dennis said. So my best friend growing up is the head of this coronavirus at one of the biggest hospitals in Michigan. He's the one who put in the drive-through, the first one in Michigan, the biggest hospital or second biggest hospital in Michigan. And he, rides his bike over at 5:30 at the end of the day. He's been there 17 days straight. And he agrees with Dennis that the pictures that you're going to start seeing from New York when people are going into external hospitals could be a big, a big negative thing for the market. Obviously, life is way more important, and that's what we're here to talk about. But if you're talking about your money and your stocks, when the market goes up for 3 days in a row, we all feel good and stronger. We just all feel mentally happier.
For sure.
At least I do. And so you get really to the point, like, I'll be honest, guys. I was on margin 2 days ago, $55,000 in margin. I was like, and I never go on margin. But I was listening to the pre-market prep show. This guy, Luke, saying margin's cheap, go on margin. So I did it for like a 2 days. But then I'm like, you know what? I'm in the euphoria of the market going up. I could just as easily be Monday and the market's down 1,000 points and I'm freaking out. And I don't want to freak out. I want to have, cash on the side, be short, be long. And so to Dennis's point about what could be happening in the next 2 to 4 weeks, maybe 2 to 6 weeks, I think you got to be careful here. So I'm really just focused on good companies. Someone asked me if I sold Tesla at 900. In hindsight, I wish I sold the whole position at 950 because this is a one that's not going to have a short-term catalyst other than battery day. If that actually does happen April 20th, there's not going to be a catalyst. The assembly lines are down and they could be down for a while. So if I had to do it over, yeah, I would have sold it. So right now I'm trying to build small, medium positions in companies that I think are really good, that are triples, quadruples. And then I look at the thing I look at is risk versus reward. So I bought that company, TAST, and I know you guys are saying, restaurants and all that. It's a risk versus reward play. There's a chance of a 5x with that in the next year, or there's a chance of a 60% drop. But I'm taking the probabilities. If you do math like you did back in high school, that's what I'm playing here.
Makes sense. Jason Raznick is the founder and CEO of Benzinga. Raz, thanks for the time. Thanks for joining us. And
can I give one last thing? Hey guys, if anyone has some good trader stories that you want us to write about on Benzinga that we can, we're doing this series about how people are trading the markets. It's you can see the tag trader stories on benzinga.com. Shoot me an email at jason@benzinga.com. That's JASON. There's no Y. And we appreciate you guys in the morning show. You can't live without it. And good luck trading. Good luck investing. Be careful. Be quick. And learn from Spencer, Joel, and Dennis. They're the best in the business. No doubt about it. Thank you for having me on.
Yeah, Jason's going to be coming on every Friday now. We booked him as 8:45 guests.
He's in.
Everyone's enjoying it. I've been trying to get him to come on for years, but
I need to know two things, guys. How is my backdrop? Do I need to change stuff?
No, I think it's better than all of ours.
That's the Pistons on there. That's not the Knicks. Someone thought it was the Knicks.
Oh, and one thing, Spencer, I went to the office yesterday and got the big bright lights. If I get up and you'll see it, I'll be a lot darker, but I have a big spotlight. So I'm prepared, baby. Let's go. Let's get this market. Let's go, guys.
All right, Raz. I'm going to let you. I'm going to let you go. I'm going to let you go. All right. The Raz, the hurricane is off, but that was great way to end the week. I want to remind everyone for a free trial and a subsequent discount to Benzinga Pro. There's always the link to Benzinga Pro in the description of our YouTube videos. Click on that. It'll get you a free trial, and then should you choose to subscribe, it'll get you a discount just by clicking on the link in the description of this video. Thanks to everyone in our chats today, both on YouTube and premarket.benzinga.com. You can always catch the replay of this show on YouTube or catch our podcast on whatever podcast platform you prefer: iTunes, SoundCloud, Spotify, Stitcher, whatever. Please remember, all the information from our show meant to be used as informational purposes, not for investing or trading advice. And I think that's it. So everyone have it gone, and we're about to leave too. So Joel and I will be back at 3:40 as we have been doing every day for the past couple of weeks. But until then, everyone have a great day and be safe out there.